On today's show, 3 questions. Number 1, was the Fed's response sufficient? Number 2, what does the FTC's non-compete ban mean for dentists? And number 3, how long should you own your car? Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Will.
And I'm Rabih.
Yeah, you are. Hey, guys.
What's up?
Rabih,
That
Rabih,
caught me off guard.
Rabih never knows what I'm going to say after, as we begin, and I don't either, to be fair. So, but I my favorite thing to do is try to catch Rabih from the beginning and get him laughing.
Yeah,
that's always my goal. It's always my goal. Let's jump right in, Rabih. We have a lot to cover. I know on the Fed, we've been hitting this a lot. It's been like the main topic out there with what's happening with Fed and inflation. So tell us, was the Fed's response sufficient? And tell us, sufficient, what are you referring to there? Their response to what?
Like, did it give the audience what they wanted? Like, is the market now calm? And, we're all aligned. We're not having different opinions and, betting differently like the Fed. Because the Fed was saying we're going to cut interest rates 3 times, but the market was pricing 6 at the beginning of the year, and now it's not pricing any. Like, are we aligned? Here's what I'm trying to cover today. And honestly, Matt, I feel like this is like the Fed coverage that we've had. Like, it's giving me a Netflix binge watching vibe. Like, every week, and like, I need to know what's gonna happen. What is going on?
So the next episode, yeah.
So just to recap last week's episode, what happened is that we're seeing that inflation numbers have been stagnant. The downward trend kind of dissipated since the beginning of the year. The job market is still too strong, and we're like, the GDP number came lower than we thought. So now, what does the Fed say? Like, where does this put us? And I told you, I'm gonna go listen to him word to word. What is he saying? And like tell you the exact wording. And
just like we watched Netflix, Rabih is is binge watching Fed Chair Powell. What he's saying, yeah.
And honestly, for yesterday's performance, he deserves an Academy Award. So let me tell you why. So the whole discussion in our mind is like, okay, the market is now pricing that there won't be any cuts because the economy is stronger than we think. Will the Fed corner himself and get into the debate on like how many cuts I'm going to be doing this year? He changed the whole wording. He didn't really talk about how many cuts. Here's what they said. The Fed isn't gaining greater confidence on inflation so far this year. And he said the Fed is unlikely to move. It is unlikely that the next move from the Fed will be a rate hike. So he did not talk about how many cuts they're going to say. He goes on, gets on the podium, and he's like, it's unlikely we're going to raise rates and leaves.
Okay, well, thanks for
nice.
that.
Yeah.
I want to be a fly in the wall in his prep meetings for these because every single word is meticulously written.
Oh, yeah.
Yes.
It's got to be, right? Like, I wonder how many people on his team of like speech writers are there, and how many edits. I would just love to be a fly in the wall during those prep meetings.
Dude, a lot happens. Like, even if you go onto like traditional media, there would be like a headline. Here's what changed from last year's speech or last month's speech. And you'll see them side by side and they highlight what remains and cross out what was removed. Like, it's the same speech.
This sounds exactly like what we do for 2 cents.
Yeah.
We're so meticulous with our
Just a script.
with our words, and we're just scripted. Yeah, it's so interesting.
Exactly. So with that, he also addressed other stuff that came up, which are interesting. So the first one that came up was when they asked him about their target for the 2.1% growth for the year in GDP. This is what they are expecting it to be. Q1 came at only 1.6 in annualized numbers. So what does this mean? Do we think that they have to revise their opinions back down, or is this just a blip? And the answer was like, we need to take into consideration seasonalities that happen in Q1 of GDP every single year. So they are putting the explanation for why the GDP number for Q1 is low based on seasonality argument. This means that in Q2, 3, and 4, the economy has to be growing over the 2% just so it averages out at the end of the year at 2.1%. So this is a bullish signal from the Fed that was like very normal. And this was the market after he started speaking was actually went up. It closed flat, but it went up as a reaction to his words. And we can think of this as you've got those sentiment algorithms that are taking words from what he's saying, and if it's a good word, they buy and they pump the market up. And those exist. Sentiment algorithms.
Oh, for sure. Yeah.
So this is what he addressed for Q2. What he addressed regarding inflation and whether he is worried, because he said, I'm not going to cut, but I'm not going to raise. And they were like, so why don't you want to raise? Like, inflation is here. Aren't you afraid that inflation is coming back, especially that the job market is still tight and unemployment is very low? And he made the argument that, yes, although the unemployment is low, the job market is, tight, and wages are increasing. What's important for us from an inflationary perspective is that those wage increases are not above increases in general productivity levels. Because if the wages are increasing, but the productivity is increasing at the same rate, at the same level, this is a net zero effect. If wage increases are increasing more than productivity increases, then that's what's inflationary. So we'll have to wait and see what productivity data tells us. It's just kick the can down the road a little bit.
Hey, Rabih, can I ask you a quick question on that?
Yes.
The data, is there a misalignment of data reporting on that? Meaning like the frequency of how we get productivity data versus wage data? Or is it about equal?
That's a really good point. If I'm not mistaken, productivity comes in monthly, and unemployment comes in, like jobless claims in a sense, can come out weekly.
Okay.
So there is always misalignment. And not only that, they are measured completely different. So sometimes if you like measure everything from the right-hand side of the equation and everything from the left-hand side of the equation, they will not match 100%. But what is important is the change month to month, or like from one data point to another. So yes, we can go down a whole rabbit hole, and it's like, how do we interpret the numbers and how they were calculated? But from afar, yes, it's a good metric to see whether wages are increasing more.
Are the inputs matching the outputs? Yeah,
exactly.
Got it.
So that's for inflation. And something that he mentioned. So the Federal Reserve, I know we talk mainly about interest rates on the podcast, but for the Federal Reserve to actually slow down the economy, they need to control money supply. Like inflation, interest rates is one tool of controlling money supply. The second major tool that they've been using is what's now called quantitative tightening. So in 2008, when the Great Financial Crisis happened, the Fed intervened and started actually not only controlling interest rates, but buying bonds, especially mortgage-backed securities, from people, from corporations in trouble. And the act of the Fed intervening in the market and acting as a participant and buying a bunch of bonds was called quantitative easing. He was easing the
putting more money into the system.
Yeah. Easing it, increasing the liquidity, etc. Since in 2018, they tried doing a little bit of quantitative tightening. So instead of buying, they're actually selling off their balance sheet, off their books. And they did in 2018, 2019, didn't really go too well. If you guys remember Christmas 2018, the market went down around 18, 19%. The S&P 500.
Ruined my entire Christmas.
Merry Christmas.
Yeah, Merry Christmas. Yeah.
And yeah, there was this whole bickering between Jay Powell and Donald Trump. Like, it was a big thing, but the economic impact was this. They were doing a lot of quantitative tightening so quickly, aka they were selling bonds into the market.
Meaning taking money out of the market.
Taking money out of the system, out of the circulation. Right. And this dried up what we call reverse repos. Reverse repos are reverse repurchase agreements, which banks do between each other overnight to lend each other money so they can hit their compliance targets set by the Federal Reserve. So there wasn't enough money in that pool to banks to settle their books at the end of the day. And the lack of liquidity just prompted banks to stop lending one another and actually caused repo rates to not skyrocket, but like jump. And this affected other rates around the market. Thus, interest rates, thus stock prices went down. So what he really highlighted is that they've been tapering their balance sheet. They've been like
trying to shrink the balance sheet.
Shrinking the balance sheet. That's the right word. Sorry. They've been shrinking the balance sheet since they started increasing interest rates at the beginning of 2022, and they've been doing it at a really fast pace. what he highlighted is that they want to taper that pace. They want to slow it down. Right now, they're going to be removing liquidity from the market at a slower pace, just not to repeat the mistake of 2018, because this is the second time they ever do it. They did in 2018. The market had a fumble. They want to redo it now and hopefully execute it better. So he focused on GDP numbers being seasonal. He focused on tapering QT, and he focused about drilling down on what type of wage increase will cause inflation, and did completely avoided the conversations of how many cuts are going to be there. So the question is like, where do we go from here? Well, he's kicking the can down the road, waiting for data to come up. We're just going to follow him. And whenever data comes up, we're going to look at it.
You, Rabih, you have one thing you put here in the doc I wanted to highlight and just get your take on. You'd mentioned that he downplays stagflation concerns. Would you mind just doing a quick kind of refresher for the good people? Yes. When we talk about inflation, disinflation, and then stagflation, can you just highlight the differences there and why we might be concerned by one more than the other?
Sure. And this showed up, this concern showed up from one of the reporters asking, because if inflation is not going to go anywhere and it's still going to stay elevated, but suddenly the labor market starts cracking and people will get unemployed, you'll be in a regime where you both have high inflation and high unemployment. And usually those are contrarian to one another, aka when there's inflation, the economy is running above capacity, everyone is already employed, and that's why inflation is here. So unemployment will be low. And on the other side of it, when there's unemployment, it means that the economy is in a slowdown, it's in a recession. The fact that it's not churning as much will not prompt prices to increase. So there would not be inflation. So the relationship is usually inverse. This is the Phillips curve we've mentioned before.
Yep.
However, there will be a period where they actually head into the same direction, where you've got high inflation and high unemployment at the same time. And this is what stagflation is called. And this happened in the 70s, and they were asking, will it happen again now? And what the Fed actually said were, like, if I want to quote him, he's like, I don't see the stag and I don't see the inflation. Like, this is literally what he said. And what he means, what he doesn't see the stag, well, the economy grew at 3.6% last year and 3.4% last year. This year, it's projected to grow at 2.1% according to their projections. This is above growth. This is not any stag anywhere. Like, this is economy growing at its healthy rate. And the second point, inflation, well, he said, yes, the data we see right now that is lagged and is annualized is showing 3.6% inflation year over year. But what we need to look at, and this is what matters to whether the inverse relationship breaks or not, is what we call inflation expectations. So what investors expect inflation to be 3 years from now or 5 years from now or 10 years from now versus what it currently is and has been for the last 12 months. And he says long-term inflation expectations are well anchored around 2.5%. So where is the inflation part on this? So that's why he downplays it. And he is kind of right. So as long as we don't see break-even inflation rates in a sense, or like inflation expectations change from this 2.5 level that they've anchored it well to, I don't think stagflation would be a concern.
Got it. And I know Will was holding everything, like it took everything in him to not make a Harry Potter joke when you said, I don't see the stag.
Isn't that a Harry Potter? I did not know.
See what I did there? You guys see that? I mean, I'm not even a Harry Potter guy, and I was thinking that. So I know Will was just itching
100%
to make some type of Harry Potter joke. So, right? Yeah.
A little Patronus.
I'm pretty proud of myself that I knew that. Okay, Rabih, that was awesome as always. Let's jump to non-competes. And Will, you have some thoughts on this. What does the FTC's non-compete ban mean for dentists?
Yeah, so a week and a half ago, FTC Federal Trade Commission basically voted 3-2, a majority vote to. They called it the final vote. I don't know exactly what that means, but apparently it's been going through votes, and this was the final vote, which essentially pushed to ratify it and say that this is the FTC is banning non-compete agreements. For dentists, I mean, we obviously are going to spin this and talk about look at it through the lens of a dentist, but I think it said something like 18% of the workforce is covered by a non-compete. It's usually, like bigger companies have non-competes for employees to not leave and go to a competitor.
The ones that have like strong intellectual property and things like that.
Right, exactly. But it's cited like healthcare is one of them, right? So I think in the case of a dentist, most non-competes exist between a dentist, the owner dentist, and associate dentist, right? So I would venture to say almost 100% of associate dentist contracts have some sort of a non-compete clause in it.
Yep.
And a non-compete clause is basically just saying there's a radius where if you're going to go like work for another dentist or start your own dental practice, you can't work in this radius, and they'll give you a geographical area that you can't work in
for a period of
this.
time.
Right. Some states already don't allow. Yeah, it's usually a year or 2 years. Some states already don't allow it. California being one of them, one of the bigger ones. But basically what this has done is just said you can't put non-competes in place anymore, and all the existing non-competes are void.
Yeah.
So I'm curious. I don't know. I'm curious to get your take on it. It feels like the student loan forgiveness stuff, because like there's a huge uproar after this was announced, and now it's back in courts getting battled. So who knows how it's going to play out, but it's kind of the precedent has been set that this is what's trying to happen. So curious to get your guys' thoughts on this.
Well, to that point, Will, I do wonder, not only is this so complicated of like what this even means, to your point. It's like, okay, they're banned from the FTC, but then like you said, there are how many lawsuits right now going on? So it's like,
yeah,
I guess my first question, this is, I guess, more just rhetorical or something I'm thinking about, is like, where do we stand then? Like if I think the student loan, the initial attempt by Biden on the student loan forgiveness is a perfect example. It's like one court case in Texas pretty much shut that whole thing down, mainly because it was like, well, we got to figure this out to see what precedent we're setting. Like, I wonder if that is the same thing for this. It's like, well, the FTC banned them. Okay, well, now we have hundreds of court cases. So like,
right.
Where are we actually with this in practicality, like in real life? So that's what I'm thinking about. My take on, I'm so torn on non-competes. My first response is just this I tend to lean towards them being kind of, I've said this before, I think this is maybe going to sound weird, I think they're kind of anti-American in some ways, like anti-competitive. I just don't know if I fully vibe with that. Like competition and innovation is kind of what drives the American economy. But at the same time, I completely understand from a business owner's perspective saying, I'm going to bring in this employee, highly train them, give my time, resources, and money and energy to them. And then if there's nothing in place, they can just set up shop next door.
Right.
So I guess I'm just going to say I see completely both sides of this. I'm really glad I'm not having to be the one making these decisions, because I think, and it depends on the industry too. I really do think that depends on the industry. And are we talking about, there's a huge difference to me between like a services industry where there's no intellectual property or technological advances that you're stealing. That I think it's totally different than just like my labor. So Rabih, I don't know what your take is on that.
No, other than the fact that I think a 50-mile radius in the age of technology and Zoom calls is very absurd. Other than that, I agree with you, and it is really industry related, because if Matt, you gave the example for it's just a business owner and their employees, and they don't want them to be competitors, but it's also, although the argument can be made it's anti-American, the argument can also be made that it protects smaller businesses from
competitors.
From competitors, especially when you've got bigger corporations taking over a certain industry.
Yep, totally.
Right? It doesn't mean that it won't allow them to compete. It's just going to make it harder for them. So like all laws in the US, it's more of a negotiation between different conflicts of interest between different parties, and whoever has more lobbying power will get the law in their side. I honestly do not know what the long-term implications for it? Like the idea that suddenly there are no non-competes, will this make people just quit their jobs much faster and go set up their own or switch to a competitor much faster? Like, I think
Yeah.
that the effect will impact everyone equally.
It's like the transfer portal in college football.
Yeah. It's just a joke, and basketball now. So yeah,
Yeah, it really is.
It's
really quick, Will. I just want to adjust one thing, because I do think Rabih pointed out something important, which is, and I think you're going to mention this, but the industry matters to me. I think there needs to be some nuance to this. I also think the employee matters, meaning what level of the company are they? Like, to Rabih's point, I think there's a difference in like what we'd call like the rank and file, right? Versus like someone who's making business decisions and like maybe getting quote unquote, not trade secrets, but like helping influence the business itself. There's a different level to those types of employees. And so I do think it needs to be addressed again with probably more nuance than just saying like full on ban or they should be there.
Yeah, I feel like it feels, and this was the whole thing with the student loans, where it feels just like a very big blanket statement. And there are so many specific scenarios that this affects that you just can't anticipate. So, their whole idea, Rabih, like to your point, is they said, we want to create more businesses, essentially. And their estimation is like 8,500 new businesses a year will be created as a result of this, because people won't be able to brand new startup companies, because people can go off and do that, when before the quote they used was, non-complete causes keep wages low, suppress new ideas, and rob the American economy of dynamism, including from the more than 8,500 new startups that would be created a year once non-competes are banned. So that's the idea.
Wow.
I don't know where they get that number.
It's a very specific number. But
yeah, it seems interesting.
Yeah.
But maybe it's just a percentage of the 300 million Americans that are covered under non-competes. And, if non-competes were gone, how they back into the number. But that's their goal. I don't think it's as simple as just banning non-competes and saying go,
Yeah. Well, no, sorry, go ahead, Will. Keep going.
No, I was just going to say, and basically throwing them to the wolves and seeing what happens, right?
Yeah, totally agree. And bringing it back to dentistry and kind of the point that Rabih made earlier, I'm thinking about kind of flipping this and saying, I'm thinking of like a dentist that comes out of school, maybe joins a DSO, right, for a couple of years to like just get their feet underneath them, get their hands speed up, learn processes, systems, and then has a dream and a desire to go start their own, maybe do a startup or something.
Right.
And I'm thinking like that DSO, big corporate dental group, will most likely be holding that dentist to I'm going to guess a pretty restricted non-compete,
yeah, right,
and would have the resources to fight that dentist. So I think of it in a setting like that, and I'm kind of like, no, I'm going to be rooting for the dentist. Like I think that dentist should be allowed to go out and start their own business, start their own practice. So I guess from that, again, it's so nuanced. It's so hard to, because Rabih's smirking and going to tell me why that's why I'm wrong. But I do think about that, and I do kind of think, yeah, that dentist should be allowed to go do that.
I'm smirking because I agree with you, and just the idea came to my mind. Dentistry is such a special case in this non-compete argument, because a dentist already comes to the job with a lot of accumulated know-how. They go to school for God knows how long, right? They go into debt, and then they are joining the DSO in our example. So where do you draw the line where it is the dentist's intellectual property that they brought with them versus the intellectual property about the processes of the DSO? Like, which one is more important to actually execute the service of attending to patients? Like, I would understand if you are working at big tech and Google is providing you the code and they don't want you to run away with their code.
Yep.
But if you're a dentist who learned everything in dental school and you're just getting technical
job experience, yeah.
Where is the intellect? Like, where do you put the weight in the value chain? What is more important, right?
Yeah, it's a good point. Will, do you have any thoughts on that?
No, I'll just see where. I mean, I liked Rabih's point where it's like we'll see where this lands based on who has the most lobbying power, and I think big business probably has the most lobbying power. So we'll see. I'm sure that we've not seen the end of this discussion.
Yeah, I'm sure not. There definitely not anything like this, especially now that there's lawsuits. We will probably be circling back on this sooner than later. So, Will, that was awesome. Again, any of your thoughts, Rabih or Will? Okay, we'll finish up with the last question. How long should you own your car? This I thought was actually pretty interesting. I think we did. Rabih, remind me. I think we hit something about cars maybe a while ago, maybe a few months ago. I can't remember, but when I was going through this and putting these notes together, something came to mind that we talked about maybe the average price of cars, or I think it might have been specifically around delinquencies and car loans rising, things like that. But anyway, this was really interesting. I found an article that was talking about the average age of cars on the road and kind of the mentality that Americans now have with their cars. And honestly, the findings very much surprised me. I guess I'll just ask you guys this. And full disclosure, we obviously chatted about this before we went on, so maybe leading the witness a little bit. But if I said to you, would you think the trend line is up or down as far as average age of cars on the road? What would be your first response? Your first thought?
I would have said down, but you led the witness, so we know it's going to be separate. But it's shocked. I was frankly shocked just because it doesn't feel like that. But
because the argument for down can be easily made. Just look around you on the street, and every year it's a bunch of brand new cars. It means people are flipping them so quickly, right?
Yeah.
Like, this is how I feel about it.
Yeah, I totally agree with that. And I would have thought that when I was reading through this, I was like, man, this actually really surprises me. But so the whole premise of the article was talking about the economics of owning your car, as that put it, till the wheels fall off. Basically, this strategy of, on the other side of the spectrum, there's the lease strategy, right? You just keep having a new car every 3 years and continue to have a car payment, just fit it into your budget basically in perpetuity. And then there's the drive it till its wheels come off. I guess really quick, I'm curious from your guys' perspective, do you have a philosophy on that for your own life?
I don't like I don't
cars?
love a lease.
Will?
I just feel like I don't ever feel like I own the car. I don't know. I've always just been I want to buy a car and drive it for a long time guy. So I don't.
So are you driving it till the wheels fall off type of thing? Yeah. Rabih, what about you?
My situation, I didn't, when I moved to the US, I didn't buy a car. My uncle just gave me one of his old cars, and I've still been driving it. And it is the typical drive it until your wheels fall off scenario. But the way I approach it is pure economics. Like, what's my opportunity cost? Will it cost me more in repairs?
You build a spreadsheet, Rabih?
Exactly. I have a spreadsheet. It's like, will it cost me more in repairs every single year, or will installments on a new car be cheaper? And so far, the repairs have been lower than the average monthly payment on a car. So
at some point, you'll hit a breaking point, and then you'll get a new car.
Yeah, exactly, for sure. Well, so I'm kind of in between. So for just to, I guess, answer my own question, for my wife, she just likes new cars. So we've always, and keeping maintenance kind of like out of sight, out of mind, don't want to think about it.
Same.
We're not car people. So for her, she's kind of always leased for several years. And we're not talking extravagant cars, talking very, very moderate cars. And then for me, my goal, my strategy, I just bought a new car, is to drive this thing until the wheels fall off, right? That's my goal. It's like the perfect car for me for a long time. So there's some data behind this, right? So as far as the argument or the rationale as far as why this number is increasing. So the average price for a new car, do you guys have any guesses of what it would be? The average price, the average transaction price of a new car in America.
40K?
So just under $47,000 is the average price. That's up from, it used to be under $40,000 just 3 years ago. So it's increasing over the last 3 years. Repair and maintenance costs have gone up for several years now, on average, over 8% year over year. And then car insurance is up over 20% over the last year. It's like 22%. So just owning cars, yeah, me too. So just owning cars has become more expensive. So this has led to the average age of cars on the road is now 12 and a half years. That is up for the 6th straight year, which again, I was pretty shocked by. In 1977, 17% of cars on the road were more than 10 years old. In 2022, that number is up to 44%. I also think a lot of this is
Has gone
the
up.
car, the quality
Yeah.
of car from 1970s has gone way up, right? The ability to drive a car for a long time has gone up with technology and just how quality these cars are. Any guesses in this report? I think it wasn't Car and Driver. I can't remember. I don't have it in front of me, but any ideas of which car makers were the best from a track record of maintenance and repairs costs,
Honda
like the
and Toyota.
fewest repairs?
I guess American and Japanese. Yeah, American and
Oh,
Japanese.
which they're the same company.
Lexus and
right?
Toyota.
Yeah, right. Yeah.
The same company. Lexus owns Toyota, right? Yeah. So the two car makers with the best track record. And then it said basically across the board, all electric vehicles have the worst track record.
Is it because they're so new, or they just have so many bells and whistles?
Cost,
or I wonder. Yeah.
It mentions the technology, the battery specifically. If something goes wrong, it's highly expensive. I've actually heard this across the board.
Yeah.
It just said all electric makers have the worst track record. So anyway, I just thought I wanted to go over this to say, like, I loved Rabih's take, and I knew this would be his take of, like, you got to run the analysis for your own situation or talk to someone who can help you with that. But I just, again, thought it was an interesting kind of concept of how long cars have been on the road and the fact that that's increasing. That shocked me. But any other thoughts you guys have on this?
I don't know if it's in the data. This is very subjective from me, but like I feel like I want my next car to be electric, but there aren't really a lot of options now. So I'm just waiting it out and try to squeeze every mile I can out of my current car before I get an electric car, and I'm waiting for the technologies there. I don't know if there are a lot of people like me, and this is also a contributing factor for why people.
I think we're like on the verge of like an electric boom, and I think I would say, obviously, that might be the most obvious statement that we make on this podcast today, but it's interesting that electric cars are needing the most repairs. But I think that makes sense just because they've been making cars one way. Car companies have been making cars one way for how many years, and electric cars for most of these companies, like you introduce electric vehicles to any of these car makers. Audi, is releasing them, and Honda is now I think almost every car maker now has an electric option. They've had to probably like redo their whole process to make these new cars. And I assume that's just a reality.
Yep.
We bought a Jeep, and it was one of the newer Jeep models that they are making for our massive family car, since I have 5 children now. And
5 kids.
Yeah, it's way too many.
You have 5 kids, dude. You have 5 kids.
Anyways, but the whole beef with it is it's the newer type of car, and there were some issues with the first couple iterations of that car. So I think the longer it goes, it's going to get better. Obviously, you just got to wait it out and make sure your wheels actually don't fall off while you're driving on the freeway.
Yeah. Well, and I'm the same way as you, Rabih, and I think probably a lot of people we'd eventually like to move that way. I think it would be great. To your point, I think the problem is one of the issues that I have is the ecosystem right now is not set up for it. I love the idea of not having to go to a gas station, but I hate the idea of getting caught somewhere on a road trip sitting for hours at a charging station, which you hear these stories over and over again. The one I always allude to is Utah football team was in the Pac-12 championship a few years ago down in Vegas, and there was only one charging station from Salt Lake to Vegas in a place called Beaver, Utah. And it was a 3.5 hour wait to sit. There was 2 different stations at this place, 3.5 hour wait. So to me, until we can get the ecosystem set up to allow for that kind of stuff, to be able to make it as efficient as going and filling up your car with gas, I think it's going to be hard to say that we're going to have. I do agree with you, Will. We're going to eventually have it. Soon. I just don't know when, because of the system. Yeah,
and then,
soon,
and then
probably.
We'll be buying hovercrafts.
Anyway, okay, guys. Any other thoughts? Yeah, exactly right. Hover shoes. We don't even need cars anymore. We'll just be flying around everywhere. Okay, this was great, Rabih. Any other?
What you opened the door to a really good conversation, but I'm not gonna go into it now. But a lot of the valuations of car companies, like the valuation of Tesla and what multiple it should be trading at, the valuation of General Motors, Ford, etc., all depends on the stage in their transition between EVs and internal combustion engines. And lately, I don't know if for the investors in Tesla, it has been selling off lately. And a lot of it is not only because new competitors are coming into the market, but because the expectations on when the transition will happen economy-wise to a net zero carbon efficient economies is now going to be, it'll take longer than we thought. And if it's going to take longer than we thought, it means that there's going to be more sales of internal combustion engines than we thought. And all of this is playing. And actually, a lot of, not us, day traders are like big on trading car companies and car manufacturers lately, simply because of this uncertainty on when it's going to happen. I can go into details later, but it's fascinating.
Cliffhanger. Yeah.
Well,
it's like
yeah,
that. Just like the Fed. Really
we're gonna have to tease that too. Yeah. Cause I think it opens up a whole other conversation around like you're saying net zero emissions, but then we start talking about like, okay, are electric cars actually that much better for the environment based on the production of them and the batteries and everything? Like there's a lot that goes into that. So for a whole nother show, we'll tease that. But final word, Will, Rabih, any other thoughts? Nope. Okay. As always, we will just do a quick plug for ourselves. Dentist Money Summit, June 21st, 22nd. It is just around the corner, guys. We are so excited. Check it out, dentistmoneysummit.com. Come hang out with us. Maybe, guys, maybe we'll do a 2 cents live there. Who knows? But yeah, come meet Rabih and Will. I'll be there as well. But these are the guys you want to come meet. It'll be so much fun in Park City, Utah. Again, dentistmoneysummit.com. Guys, that was our 2 cents. Thank you so much for listening. Have a great weekend. Till next time. Bye-bye.